Hello ladies and gentlemen, and welcome to another video from Swaraj Finance. Today we're going to do a bit of a deep dive into the British pound and looking at how the Brexit transition, the move out of Europe, and the coming period that we're moving into of rising interest rates, how that looks set to impact the pound, and also linking that to the FTSE, so what the UK stock market might be expected to do going forward. So what you see is a chart of the British pound against the dollar, and as you can see, the long-term trend has been downwards. We've been in a kind of parallel descending channel in terms of price movements over the last 50 years, let's say. And importantly, we recently touched the lows of this, what's been a strong support trend line at the end of, or say it was about September of 2022, last year. And we've had strong rebound off that trend line. So if you look also at the volume, you had very strong volume buying up of the pound at this low level. And our financial opinion is that probably we might have seen the low in the pound against the dollar for quite some time now. We would expect, we've also had a kind of breakout of this descending wedge pattern since the crisis of 2008, the global financial crisis, which saw the pound drop against the dollar. And we've been in a kind of downward trend since then. We've broken out of this trend. That was done in 2020. We came back, we did a retest of the trend line, and we found strong support of it, confirming the breakout. And now, as you can see, the direction we expect going forwards would be to probably test the halfway point of this channel first, pull back a little bit, and then go up to test the top of the channel, which would see the pound against the dollar anywhere between 1.7 and 1.8 probably. Given that this is such a long downward trend, we could also see this trend now resolve to the upside. So we'd first expect 1.7 something to be hit, some consolidation, and then potentially even a breakout to retest the highs of 2007, which would see pound at $2 to the pound. That's a potential scenario, but for sure we would expect this trend to be tested on the upside again, and that would be in line with the kind of cyclic testing of this trend line throughout history. Another thing confirming the support in the pound at the level which it dropped to in September last year was this. It's a very significant number because it was around parity, so it almost hit $1 to the pound, and this was the level that we saw in '85 when there was a UK crisis in the UK housing market, I think, at that time. And so this could be what we call a double bottom formation, and a huge double bottom, which mean we wouldn't see these levels in the pound again for a very long time in the future. So let's firstly look also against the euro, what the pound is doing against the euro, because that's another competitor, and this obviously has implications with regard to Britain's leaving the European Union. So in the euro, we see a similar downward trend going back to around 2000, which was the peak of the euro peak of the pound against the euro, and then a kind of lower highs since then, forming another descending wedge pattern. But as you can see, there's been strong support just around 1.1 euro to the pound. Strong support for the pound, and you can also see that we're forming a rising trend line here. So pound is making higher lows, and also we also see this rounded bottom formation. So this curve shows a formation where you're not making much lower lows and then you start making gradually higher lows. So it's a formation where it shows the bottoming in a particular price movement. So this curve has acted as a nice support level throughout what is more than 40 years of history in the pound against the euro, and it could be showing that we're now in an upward trend. And our opinion is that certainly we'd expect this descending trend line to be tested going forwards. You'd expect a retracement, perhaps again testing this curve line, and then eventually a breakout of the pound against the euro. And this would be symbolic of Britain leaving the European Union, so forging its own economic path going forwards, forming trade ties with nations like Australia, Canada, India, the US, representing a new era for the pound going forwards, which could see considerable strength in the pound. Obviously, this has negative implications for the euro, which we see underperforming going forward, but we'll do another video about that at some point soon. So this is this strong indications that we have a strong pound going forwards. So let's take a look at the FTSE 100 to see what the UK stock market is doing. So I'm just going to go to the candles for a moment. So you can see there was a strong resistance line that had been formed over the last few years on the FTSE, and we recently had a breakout. We came back, we fell back in, but then we've broken out again to the upside. And really the FTSE has not done a great deal for quite a while, really. You can see on the whole, the highs of 2013, well, we were in, 9 years later in 2022, we were at the same kind of level. So we haven't had much movement in the FTSE for a long time. And this breakout to the upside could mean that what's been almost a decade of kind of sideways movement, consolidation, would lead to powerful moves to the upside following this breakout. And that would mean that coincides rather with what we see as being strength in the pound. So positive movements in the UK stock market would need capital inflows. People would have to be buying up UK equities, which would mean they need the pounds to do so. So these two go hand in hand. When the FTSE is strong, you'd expect the pound to have strong support under it, buying strength into the pound. So that's something we see going forwards. Another chart that I'd like to show, because the UK economy is dominated by the financial sector, the banks, the City of London, of course. And if we look at the UK banking sector priced against the FTSE 100, so this is a relative ratio, which shows the banking sector as a percentage of the UK stock market. You can see we've been in a parallel channel, so it has strong periods, pulls back, then it has strong periods again, and recently you've pulled back to hit the support line at the bottom of the channel. And so again, going forward, we see the UK financial sector outperforming going forwards, We've broken out of this trend line, we've retested, and so now we'd expect a kind of movement something like this, going up to retest the highs of this channel at least, and again we could potentially even see a breakout to the upside. This strength in the financial sector means, because the financial sector is such a strong part of the British economy, this strength would be indicating strength in the British economy, obviously, and strength in the pound. Also, this ties into the fact that we're in a rising interest rate environment, where banks can charge higher interest rates on their loans, which means they're earning a lot more cash, and the margins between what they have to pay savers and what they can charge borrowers increase. So their profit margins also increase in rising interest rate environments. And we've just started to see that if we look at earnings reports from Lloyds Bank, from Barclays, HSBC, and so on. We've had bumper profits and increases in dividends across the board going forward. So that shows now that the start of this strong, what we see as an outperforming period for the UK banks relative to the rest of the UK stock market. So there's plenty of signs indicating strength in the UK stock market and for the pound in particular, and this ties into the UK's move out of Europe, as I said. So for investors, the UK might be somewhere to shelter from a kind of a struggling European economy. Could be also sheltering from what we see as potentially a fall in the dollar in the short to medium period. Again, we'll do another video about the dollar separately, but the UK could be an interesting place to look at for investments. This is obviously not financial advice or a recommendation to buy or sell any investment, but it just represents our financial opinion. And lastly, I would also add that we're in a rising interest rate environment, which also corresponds with strength for commodities, inflation, and these sorts of things. And in the past, that has been good for the pound. Also, if we look at Europe, the decline in the euro relative to the pound also reflects the geopolitical uncertainties with regard to Russia and Ukraine. It also reflects the energy crisis, where Europe is struggling to source enough energy since the cheap and abundant Russian oil and natural gas have been diverted elsewhere. Europe has been thrown into an energy crisis, and although parts of Europe are well supplied in terms of energy, as a whole, this lack of energy will affect the euro as a currency. Britain has the North Sea, and so any worries with relation to energy sources can always be covered just by investing in the energy resources that Britain has. We also have onshore gas through shale fields in the UK also, although there's political antagony towards that onshore oil and gas. Offshore is much easier to quickly turn around because it's out of sight, out of mind, so to speak, whereas the people can't see it, and so drilling wells in the sea, in the North Sea, to bring on oil and gas supply is less of an issue, and the UK has an abundance of that. So these are some of the reasons why we see the pound doing well going forwards, and the FTSE also. It might be something that you want to consider in terms of your own investments, but we're not offering financial advice in that respect. If you do want further ideas with regards to how to structure a portfolio, which particular UK equities we like, you can sign up to our Portfolio Insight service via our website, and you'll find a link in the description below where you can learn more about that. We currently have an early bird offer, so you can join for half price for the first month, which would cost you just £9 and then £18 a month going forwards, but there's no tie-in, so you can cancel at any time. And there's lots of other opportunities, and if you've seen some of our other videos, you'll know something a little bit about where else we see as opportunities in the market going forward. So I hope you've enjoyed. Please like and subscribe to the channel. Share this video with anyone else who you think might be interested in the analysis of the UK stock market and the pound going forwards, especially for your European friends, perhaps American friends, perhaps. And we'll be back soon again for another video. In the meantime, take care. Thanks a lot.